Welcome to the latest Motley Fool Scoreboard. I'm Anand Chokkavelu, and we've got longtime fools Jason Hall and Matt Frankel giving a 1 to 10 rating to a Moneyball wreck, Goosehead Insurance, ticker symbol GSHD. We'll rate the strength of Goosehead's business first, including factors like industry and competition. 10 is invincible, a 1 is hopeless. Both of you have 8s, Matt.
Yeah, Goosehead uses kind of a unique franchise model where, unlike a lot of other insurance companies, they're not a captive agent, meaning that they could sell products from a lot of different companies, and it's not buying direct, so customers really can get the best deal. Think of it like an internet aggregator like Kayak for insurance. There's a lot of competition in insurance, but this is kind of a unique business model, especially for a company of this size.
Yeah, the funny thing about the insurance industry, too, is it's littered with so many winning investments over the decades. And often it's companies that the average person, unless you're maybe a customer of them or you work in the industry, you've absolutely never heard of. It's also proven harder to disrupt. And it's not subject to like the same economic cycles of other financials like banking. And as a result of those things, you get a good business like Goosehead, and it can be extraordinarily profitable.
Now, we'll get to those financials soon. Well, let's talk about management. A 10 is Warren Buffett. A 1 is Homer Simpson. Once again, both of you have 8s, Matt.
I said an 8 and not higher just because Mark Miller, he's done a great job in his relatively short tenure as CEO. But it's fair to say that he's somewhat untested. Mark Jones Jr. is the son of the both co-founders and could end up running the company someday. He serves as CFO and COO. And I interviewed him not long ago, and he's a great leader. Lots of insider ownership. The stock has handily beaten the market since it went public about 6 years ago. So I give it an 8.
Yeah, Mark Jones Jr., he's got more bona fides than just the same last name as his parents that founded the company. He worked as an auditor for Ernst & Young. He's a CPA. He's in his early 30s, so I think there's definitely some grooming going on there for that long-term position. But Mark Jones has been with the business since 2022. He spent a couple years as the chief operating officer, and you still have Mark and Robin Jones, the two founders, as the chair and vice chair of the business. They have substantial ownership, and I think you have to give credit where it's due. If you look at the past, call it 6 years since the company went public, earnings per share have increased by 4x. That's exceptional, and that's the biggest thing that's driven the market-crushing return since the company went public.
All right, let's get on to those financials. A 10 is a fortress. A 1 is yikes. Jason's at an 8 again. Matt, you're a little lower at a 7.
Yeah, I'm a little more debt averse than Jason in general, and the balance sheet's decent, but as Jason's going to discuss, their debt has increased a bit lately. Earned premiums have grown at a 28% annualized rate for the past 3 years, which is really impressive for an insurance business. Operating income nearly doubled year over year in 2024, and the bottom line's growing really fast. So financials are impressive. It's just the debt that scares me a little.
Yeah, and the way that debt has grown is a thing that I certainly don't love. They took out, I think it was the beginning of the year, $300 million in debt. Part of it was to refinance an existing roughly $100 million in debt, but the bulk of it was largely used to fund a one-time special dividend. Now, part of that went to common shareholders, but there's also a kind of a weird corporate structure, and there's some LLC owners of an LLC that has a stake in the business, which is largely the founding family. So you don't love that you're taking out debt just to kind of kick money back out to shareholders. But even with that $300 million in debt, it's very serviceable by the strength of the business and the cash flows. So I don't think it's an onerous thing. I just don't really love the reasons behind doing it.
All right, Jason, let's talk valuation. How well will Goosehead's stock do over the next 5 years? Now, safe is it? 10's a sure thing. 1's a lottery ticket.
Yeah, so maybe a little bit of binary risk here. My safety score was a 6, which to me is kind of right on the cusp of, depending on what's going on with the business, could do really, really well. I think 10 to 15% is probably the most likely outcome. Here's the thing, though. If growth slips, then I think it could underperform the market and even lose investors money, because at 72 times earnings, there is a lot of expectation that the rate of growth that we've seen from the business, the growth of the premiums that it's accumulating, and the earnings growth that that's driving, if that slips, then the stock could really underperform a lot.
Yeah, I would agree somewhat. I think I gave the safety score a 7, although I did do the same 10 to 15% range of returns. And the reason I gave it a little bit higher of a safety score is, they sell a product people need, first of all, and they have excellent customer retention that they've established. They don't have the longest track record as a public company, but it's a pretty nicely established trend. If it can manage to keep even most of its momentum going, this should be a pretty nice returner for investors.
Thank you to both Matt and to Jason. They've given Goosehead Insurance a strong overall score of 7.5 out of 10. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is PJT Partners. Till then, Fool on.
By the way, that's an awful shirt you have on.
Awful good. It's awful good. You know what dogs eat? Chickens.